Want to pay less for your house each month? Well, who doesn't? Did you know that you can buy a home with a VA loan and have the seller cover most of your costs? Let's talk seller concessions. If you're using a VA loan, you already have a leg up. But what if it could save you even more by having the seller cover your closing costs, prepaid items, or even your VA funding fee? That's what seller concessions are for. I'm Jason Wood, the VA loan guy, and today we're breaking down how to combine your VA loan with seller concessions to keep more money in your pocket. So what are seller concessions? Let's start with the basics. Seller concessions are when the seller agrees to pay some or all of your closing costs or other allowable expenses with the proceeds they're getting from selling their home. They can cover things like title and escrow fees, appraisal and underwriting charges, property tax escrows, even the VA funding fee. The VA allows seller concessions up to 4% of the home's value on top of your closing costs. That's much different than any other loan program out there, and it's an extremely powerful way to reduce what you need to bring to closing. So what the VA allows and doesn't. VA is actually pretty flexible here. Here's what seller concessions can legally cover: funding fee, prepaid taxes and insurance, title insurance and escrow, discount points to lower your interest rate, lender fees. What they can't cover: your down payment, though VA doesn't require one anyways, giving you cash back at closing. The key is making sure the concessions are properly disclosed and fit within that 4% cap on top of the traditional closing costs. So here's a question for you. Would you rather the seller lower the purchase price or cover 10 grand in your closing costs? Sometimes it makes more sense to keep the price firm and get that extra leg room for covering closing costs. You just need to structure it smart, especially in a competitive market. I have a veteran who bought a home recently for $400,000 and the seller agreed to cover $12,000 in closing costs. The VA loan covered the full purchase price. He bought the loan $0 to closing. Another client of mine used $8,000 in concessions to buy down the interest rate. It lowered his monthly payment by $200 a month. That's a big savings over the life of the loan. Think of seller concessions like closing coupons. They only work at the end of the deal, but they can make a huge difference. So here's how to get the most out of your seller concessions with your VA loan. Number one, max it out. If you need help with closing costs, ask for the full amount plus 4%. Buy down the interest rate instead of just covering the fees. Use part of the concessions to reduce your interest rate. That means long-term savings. Or use some of the seller concessions to pay off some debt at closing and reduce your overall outflow of cash. A strong offer strategy. Instead of lowballing the price, offer close to list price, but ask for concessions. Sellers like clean, full price deals with clear terms. Talk to your VA savvy lender before writing the offer. We can help you structure it to benefit you and still appeal to the seller. Want to see how seller concessions could work for your deal? Let's run the numbers. We'll help you understand what's allowed, strategize your offer, maximize your VA benefit while reducing your cash to close. Book a free call with us at valoanguy.us or click the link below. With the VA loan and smart concessions, you could walk into your new home with minimal out-of-pocket costs, maybe even lower expenses, and a lower mortgage payment too. Let's make it happen.